Yo, yo, yo. HFR from the floor. I used to be. Mistrade the don't, still suspended. Market Vitals IO is the community. Market Vitals is the stream. Man, we just had a great colorful conversation with the gentleman at Benzinga, and what a delight it was to hang out with the younger trading generation. And I think he was unprepared for maybe the veracity of our argument that this is a bear market, and you best prepare accordingly.
Let me start with one chart here that I think is interesting, that is kind of right where we are. We're on the precipice. And the bonds, 136.19 is our low today. Guess what? That took out the 2018 low. We've been calling for that level. I just want to say, there you are. If you're looking for a place maybe to cover for a bounce, we might get a double bottom here. Now, if we don't, I mean, you're going back, you're going to take out lows from, the 2013 lows, which are down here at 134. And you already know where I feel about this long term. I mean, we know interest rates are just beginning.
2013, again, Matt, that was BB for me, before bend.
Yeah. Well, and I still think we're coming here, Bob. I think ultimately we're going to land down here at 112. So, and look at how quickly we went from 191 to 136. The 191 was the spike on COVID. These bonds have been in we've now taken out, here's what's interesting. The COVID, think about this. We keep talking about COVID low on equities. The COVID low on bonds was right here, and that was 155. We are now $20 below that level, roughly. And that has not, and that's happened, here since, the beginning, since February.
Right on. An incredibly clear, obviously a long-term chart there, but now we're fully in the meat of this longer-term profile.
Right.
As long as this market holds that high end of that value range, which is obviously a great bounce, right? If this double bottom holds, what is the high of that value range?
This right here, 150.
Yeah, 150.
150.
An insane bounce, right? The law of big numbers is giving us giant ranges.
That would be a 10. That would be a 10% bounce from here. But I don't think we get past 144. Quite honestly, I don't, because the momentum is such that interest rates have to continue to go higher. We are going to have a recession. There's no doubt about it. Now you can't stop this. And if you're not looking at long-term charts on everything at this point, you're missing the game. And this is hard. This is hard for the guy that only uses the 2022 chart or the 1-year chart or the 2 or the 3. That bond chart that we're looking at here is 25 years. When was the last time you looked at a 25-year chart as a trader? Yet there becomes a moment when markets go from the short term to the midterm to the long-term charts that become in control. It happened in oil when oil, tanked all the way to, negative. It literally, I knew it was going to go to $10. I did not know it was going to go to negative.
Well, the negative thing was just a function of the market, i.e. the participants in the futures market that didn't have a delivery point had to get out of those commitments because it's a deliverable commodity. And so they had to liquidate that position. There's no buyers. If you didn't have a delivery point, you couldn't get long. The people that actually had the delivery point, they just went like this. Okay, let's see where I can get this. Oh, negative $40. How neat is that? Yeah. Okay. Negative 40. Thank you. I'll book some deliveries there.
Yes.
And in our broadcast today, I've made the proclamation that we aren't going to see the highs in U.S. indices for at least a decade. And it was met with a rather raised eyebrow. But I just want to go back, and show the NASDAQ chart from the .com bubble, because I was actually wrong, Matt. Here was the high .com March of 2000, and it didn't take this level all out until.
Yeah, but here's the, before you get there, go back to the percentage loss, Bob. That was an 80% loss, right? And he's never seen an 80% loss. He was in diapers when that happened.
Well, he wasn't quite in diapers, but he was for sure batting in the Little League.
Maybe.
And I went back to, and I used that analysis of the batting average, like, Rod Carew, a career 400 hitter, right? But I guarantee you he went through stretches where he was batting 87.
Yeah.
My point is 15 years. It was 15 years before we took out that dot-com bubble high. And what's different, Matt, about the dot-com bubble high, which was frothy, incredible speculation, no adherence to risk, no real idea. And by the way, there wasn't a giant inflation situation going on there either.
No, there wasn't at all. Because interest rates in 2000, were right around 8. And guess what? We're not at 8. If we're to go to 8, why wouldn't this correct itself 80% again? 80% happens, especially in technology like this.
And here's my point too on the standard deviation modeling. Again, in the monthly, for sure we could have a kick save. And if we do in this month, and the NASDAQ could come back and trade and close the month above 13,743, this lower momentum level, I reevaluate, right? I said that in the show today. The absence of weakness and a close back above that momentum level would be that. An absence of weakness is actually strength. And I look at that all the time. It's like, wow, if it was back to the batter, wow, this guy, he's not hitting 0 for 4 every game now. He is actually 2 for 4, back to that type of idea. But until
and here's what's happening. We're getting to the round number bingo is starting to happen, right? We, 4,000 is coming up. I think we're going to trade through 4,000. That will be the first scare, and we might go down to 3,900 on the SPOOs. And we have not taken out 4,000. We're at 41. What are we? 41.40 right now.
41.43. Right on.
Yeah. So we're still, we're still 4 or 5% even from that number being hit. And at 4,000, if the high was 40, what were we? 40? Did we get to 48? I don't remember. What was our high? 46 or 48? It's all blurry to me right now.
All-time high.
Yeah, the SPOOs.
The all-time high is 48.08 quarter.
So 48, less 960 gets you to that 20% haircut, right? That gets you to that 3,900. I think we got to test these round numbers, and we're getting to that spot, and that would bring in some fear, and fear is what you need to see if there's some real buyers. And then when they come in and they bounce into a level that can be sold again, then they got to see if that fear is reignited when we come back to that 3850 or that 3,900, right? So that's kind of how I see this playing out. And it just feels heavy. It feels really heavy. It feels really orderly. Again, this is nothing like 2008, 2009. That was crazy. It was crazy every day. And it was not orderly. It was chaos, right? There was all kinds of unknowns every day. Are we, can Goldman Sachs, can they save us again and again? And
speaking back to my talk that we talk about all the time on the elites, what a great example of the elites when the house is on fire, the elites don't trust each other anymore, man. No, that's just the way it is. Yeah. In fact, the Fed was trying to get Goldman to buy Bear Stearns. And they said, okay, we'll consider it. Let us look at their book. And as soon as they saw their book, they're like, holy shit, they're in worse shape than we are.
Right.
There's no chance we want this. I'm speculating that on viewing the book, they might have shorted the street as hard and fast as they could. Mm-hmm. I don't know that to be a fact. But the elites trust each other more and more until they don't. And I think that's where that's what it feels like is percolating here.
Yes. I agree.
Matt, let me share this because it goes back to this currency. We talked the dollar, and we've been talking the dollar tons. And this was from my friend Marquise. This is depressing. My company stock is priced in sterling, responding to the pound getting pounded. The pound cable down 250 pips, 10% inflation, yada, yada, yada. Bank of England says it's going to, long-term rates should go to 2.5% by the middle of next year. I don't think anybody's anticipating that maybe this goes much faster. Anyway, I wanted to bring this up, Matt, because we've talked about the US rates. If you look at the Eurodollar curve, DSIV 23 has a 3.5% rate. So there's no light at the end of the tunnel for the cable when if the US rates are going to run at 1% higher. Money looks for return, Matt. And there's big currency flows when people can capture a much better return and denominate it in another currency. Interest rate arbitrage is real and money flows. And so I don't see how the pound corrects its course against the dollar anytime soon. Why don't you bring up the pound chart and let's just look at it again from a little bit longer term time frame.
Yeah, we can do that. What I brought up, I think I had ready for you about a 10-year chart. Do you want longer than that?
No, that's perfect.
All right. So all-time high on this is dollar pound was 87.55, and we're currently at 81. Again, yeah, this trend has been up for 2 decades, so it's not new. And again, I think the euro failing after the pound kept trading, the euro replaced everything, right? The euro.
Yeah, the marks, the lira,
so it's a surprise it's a surprise it's taken this long, but when you think about this, it was 47 cents back in 2008 when the shit was hitting the fan. Then just again, kind of continue this theme. Well, again, everybody has been on the wrong side of this trade for the last 18 years, and the trend is so clearly upward that you'd have to be blind not to, you should have seen this here on the first power move off that 2008 low that that Britain was done. Europe is done next. And I'm going to say this again, the sovereign wealth across Europe and the United States, nobody can pay their pensions, nobody can pay their social securities. Eventually that comes to roost. You don't just print $6 trillion out of thin air because you have a pandemic and lock everybody down and expect to escape without some bloody mess on your shirt. It's just not going to, again, it's inevitable. You can pretend that it's not that the fantasy world is going to continue, and you live in Dubai where everything is, weird and facade, and that's not the real world. It's not the real world.
No, and the real world is rearing its head.
And then, the other thing that interesting, I want to bring this up because we talked about this on the show, and you and I have been talking about it for a while, but let's just look at Peloton, right? Hard to believe, Kathy Wood was pounding the table at $170 a share in the beginning of 2011. And fuck, man, that thing's 95% off today. So don't tell me it can't happen. Why is Peloton any different than Microsoft or Apple?
And why is 2000 an anomaly? Why is 1929 an anomaly that'll never happen again?
Right.
It's just, listen, all of that money printing, it seems to me now is there's an effect going on here, and we're looking right-sided. And again, on the monthly in particular, we're not fully right-sided yet, but on the weekly, the 3-day, for sure we are. And yesterday's action coupled with today's action is all you need to know. How can you have a 5% rally that everything's great and then give it away the next day? The law of big numbers, if everything is fine, it's like the patient's on the table and we got a heartbeat. Oh, everything's fine. Everybody leaves the room. Wait a second, he's dead again.
Unfortunately, that's a horrible analogy, but gosh, we just saw it here locally where a kid was drowned in that situation. Literally, they kind of revived him in the ER, took him to the ICU, and he died again. He was dead, and he died again. It's we're not even to the dead stage, right?
I'm not dead yet.
But that's the thing. And everybody's, you can be hopeful, but hope doesn't do you much good when you're in the portfolio management or trading business. So,
we said it
my lesson from that harshness was wake up. Like, don't buy it. Don't buy JP Morgan. You know, we heard them in their show. They had the guy talking in there. Well, if you're looking for value, this is on sale. Yeah, it's on sale, but it was also way overinflated. Maybe this is a price you'd rather buy it at 77, and just looking at the value area, 100 maybe. Maybe you can.
Not only that, now that you bring that up, let's go back to Pete Stadelmeyer, one of the co-inventors of market profile trading. You've entered that long-term value range by his work on a daily methodology. You got an 80% chance to cover 80% of the value range.
Yeah, so 80% of 123 to that's 40 points. 80% of that is 32, which takes you down to 90. Right in here, Bob. That's again, that's not even the COVID low.
Bingo, bingo.
It's not even bingo, the COVID low.
Bingo, bongo. Matt, I wanted to bring this one up because we talked about it yesterday. IMF, the adoption of Bitcoin in a Central African country raises problems. Mostly it raises the problem of kickbacks for IMF people, as far as I'm concerned. We talked about Bitcoin yesterday, and I said, listen, it might be a hedge towards everything that we've talked about, the 300 trillion in sovereign debt worldwide. But until it decouples from the U.S. equity market, that's the whole story, Matt. Until it decouples, it's not a safe haven. And if you look at today, it's just got smeezed, just as the rest of the market did. It's down almost 9% today.
Bring up your momentum chart on Bitcoin, because I want to drive this theme I'm talking about here again, this COVID low theme, to where we went, to where we are, and where could we go. This is our job as traders. Don't look at the last 5 months to determine your charts. You need to expand your time frame. Well, the COVID low for Bitcoin, Bob, was 4,000.
Here it is. That's January 19th. Here it is.
That one. Yep.
March of 20. The low,
3,500.
38.58. This was at Coinbase. 38.58.
And we went to 60, 65, 68, whatever it was. That's a 20x. At these prices today, we're still 10x. Is it really worth 10 times more than it was? Oh, that is because all that money that got printed
worldwide, by the way.
No, but all that money that got printed, 6 trillion in the US and everywhere else, went into Bitcoin, went into shit coins. It's got to be taken out.
And as you see on this chart here, this is the monthly. As I said, we're only at the 5th of the month, so this can do anything in the month. But right now, it's in lower momentum. The bands are rolling down, and when you fractal in, and we talk about fractaling all the time, in and out, the weekly, they tried to raise their head here. In fact, they got into up momentum on the weekly, but they couldn't sustain it even enough to change the slope of the band. And that is very weak. Now back in lower momentum on the weekly. I would not be buying Bitcoin with Mother Teresa's money right now. So
how about the popes?
The Pope. Talk about institutional inertia. Let's talk the Pope. All right, Matt. What else do you want to cover?
What else do I want to cover? I think it's an interesting time. We have the jobs tomorrow, and we did have an uptick in ADP, and so how can you not say that is not going to eventually show up? Now, I don't put a lot of faith on these jobs numbers to begin with, just like I don't with the FOMC. I kind of wait for the market to react. The low for the year on the NAS is 12.7, let's call it. We're at 12.8. Why can't we flush tomorrow? Why can't we really, make some people panic and make them really panic Monday, right? Why can't we go down another 5 to 10% in the NASDAQ? Why can't we go down another 5 to 10%? And if we do that,
right, exactly.
And if we do that, look at Bitcoin, because if we break, this thing's down 10% today. if we break 33,000, we're going to go test that 28, right? When that 28 goes, let me just bring up this again.
Yeah, and then I'll bring it back up because I'm just looking at this weekly chart again. I just want to point out
this is just a daily chart. I'm not even going back as far as you. I do have the COVID low. Here's the COVID low back here at 3,800. 69 was our high. We're currently holding at 36, down 9% for the day. Bob, there's nothing. This little bump here that we've been, cruising and spending really for the last year. We had the blow off, 2 blow offs, and now failing. When this fails, I mean, Bob, when this goes next time, it goes down below 28, and we're not in July of 21 when the bull market was still going on in equities, right? So now it's a totally different situation. We're not.
We talked about that today.
We had 6 months of parabolic coming yet. And you and I talked about it at the end of last year. They're just going to print it all the way to the top for 21. And then they're going to collapse it. And that's exactly what they've done. They've trapped everybody. Biden is underwater since his presidency. No matter what you're looking at, every asset class now is red. They will start talking about that. When they start talking about that in the press,
you know the drill.
You know the drill.
Right on. Yeah, I'm looking at this longer term profile, and I like this inside a trading view. You can snap just a section of the chart, right? And give your profile just on that section of the chart. And that's what I've done here. And so this is just this consolidation from August of 17 all the way here to the beginning, to the breakout. And that long-term point of control is 83.67-ish. Mm-hmm. Again, so yeah, this 28 fails. It seems to be logical that that's the magnet that it's going to run to.
Yes, I think so too.
All right, Matt. What a great day today so far. Great day. Great trading markets. You cannot marry positions in this market. I'll tell you that right now.
Well, I you and I, before the Fed even spoke, I said 13.555. I would be a seller today or tomorrow, and we literally hit that number. And again, why did I come up with that number? Came up with it because of the range expectation.
What was it? 384 today in the
Today, I don't know. I haven't even looked. Today's a waterfall day, so I take all that shit off the table.
Yeah, we are outperforming the model today.
Yes. Which
makes sense. And what else that tells you is don't be surprised if tomorrow we outperform today.
Well, and we go up, we could go back and revisit 13.5.
Right on.
And it's interesting because as the bonds go into close here, they're buying them.
All right, Matt.
They just took the bonds up, 136.19, and they're wrapping them up here at 137.05.6. So again, 2.5. We're down 3 points still on the bonds here, 2% in a day, Bob.
What's the hardest thing for me in front of the screen compared to in the pit? In the pit, I mean, you could see the terror, especially on order filler's face, because as an order filler myself, I understand the risk that I'm undertaking in executing orders. Like there's giant risk executing orders because your mistakes become your position.
Right.
And so you could feel the intensity of people's emotions in the pit. And you didn't have to even ask. You look at a guy, he's sweating. He's sweating like he is on an all-night Irish bender, and he's holding the deck. And you're like, oh my God, man, this guy he's about to have a coronary here, and we haven't even hit the stops. It's hard to gauge that in the electronic environment. There hasn't been this major washout. We've not seen a really dislocated market yet. It's been very orderly.
Very orderly, quiet, eerily quiet.
Eerily quiet. I mean, it's falling away. I can't even imagine.
Well, and I think that's actually what gives, the guys on Benzinga confidence, because they just think it's just regular day.
I can't even imagine having a 5% day and not having people that didn't need some counseling by the end of it, right? And it's just like, yeah, it's 5%. You're talking about the value of a US index stock market. Oh yeah, it's off 5%. It's no big deal.
Right.
What? I don't know, man. Interesting times.
Yeah, no, and I think that's it. We've had such big moves that, people, they don't think you can go down that far, even though again, they won't look at the whole picture and go back and look at how far we've come, right?
All right, so here's my question, and let me pose to you. So how much is a daily move that gets somebody's attention if 5% isn't? Is it 10? Is it 15? Is it 20?
Well, and again, 08 and 9, how many, I'd have to go back and count, but how many max drawdowns do we have? Pause, right? The whole,
right. We haven't even hit a circuit breaker day.
No, we haven't hit one. We haven't hit one. I think we might have hit one COVID, maybe one, but that's it.
All right, well.
There's fences around SCOTUS, Bob. There's fences around it. Do you think there's something going to happen there?
I don't know. The whole world seems to be at a diversion.
The legislative, executive, and now judicial branches have all been breached. That should be scary to people. That should make you wake up a little bit. All trust and authentication has been removed from those three branches, which is our country. And the last one standing was the judicial. The only thing that's left, Bob, is military.
Man, when you put it like that, now I'm starting to get nervous. I think I got 1,000-lot stop in my hands. Lee, you're eerily quiet, taking this all in. Anything from the peanut gallery, other than no New York teams in basketball or hockey playoffs. Is that true?
No, the Rangers are probably there. Brooklyn's bonker, they suck, but who knows?
Matt, you have Tampa Bay in 6.
I do. After that game last night, I think they got to go. They're going back to Tampa Bay, and I just still think Toronto's too soft and too lib as far as living up there. That affects people.
It's like we talk about institutional inertia. That is like proximity bias.
Mm-hmm.
You watch the news every day, and it makes you soft.
Yeah. If you're watching Justin Trudeau, it's going to affect your game eventually.
I knew I loved to hate him when I saw that he was a snowboarder, Matt. Officially. All right, I hate him.
Knuckle dragger.
Snowboarder. Get out of it. Quit ruining the mountain. Beat it.
Get out of here.
All right.
And by the way, just to finish the story, we talked about it yesterday. Where do I think, Airbnb, we talked about it 2 days ago. And again, this is a great educational situation, why we talk about these things and why I said exactly what I said, which is the thing will bounce, it will be short-lived, and we will go to, what did I say? What will we go to? New lows. We're there today. We're down 9.4%. Again.
Nothing to see here. Move along.
Move along.
10% haircut. And last but not least, as we go, Matt, let's bring up ARK. I said that on the Benzinga show. Largest yearly inflow yesterday. Bring it up.
Okay. Happy to.
It reminded me when I looked at the chart today of the Simpsons episode where he opened a bank account and the banker said, and it's gone. Please get out of the line. Please get out of the line. This is for bank customers only. But I just opened an account. Yeah, but you have no money left. So
again, on the daily, we're getting, we've kind of exhausted the value zone. We've got, here's a good example of what this looks like. When we say it enters it entered back here in the fall when we were screaming, sell, sell, sell. You've been long from 33, you missed 160, sell here at 120. Well, we saved you 75% from there just by simply following
an age old
things revert. They revert to the mean. So I know you were in diapers in 2000 when the market reverted 80%. The NASDAQ went down 80%. The NASDAQ today, if we were going to look at the Q going down 80%, by the way, right? Let's just talk numbers. Let's talk numbers. If we went from the high 410, I'm kind of bummed it wasn't 420. Why wasn't it 420?
Right.
That would be, it really would be perfect. 408. So if you take 408 and
Matt, I somehow muted you. Unmute you. There you go.
80% of 408 is 326. So 408 minus 326. Guess where that takes you, Bob?
Right to the point of control.
Nah, it doesn't. It takes you much further, but it takes you to 82, which is somewhere down here. But you can see, again, I'm not, we start going to the long term here. Let's go.
Well, you can even do it there, Matt. As we've said before, the season hasn't even started.
Hold on. Let me just bring this. Let me give you a weekly chart, Bob. A weekly chart. The weekly point of control, going back to the history of the chart, is 37. Okay. 82 is somewhere in here. And guess, that's the 2016 low, which was the Trump, when they thought, when
Trump was going to end, when El
Trumpenante
won the
presidency. And the market turned that night. It went down to 84. That was the last time we've seen that price. Okay. So it hasn't even been that long. 6 years. 6 years for us to go from that Trump low, and then he won the election, and that night it reversed hard off that and was already up 20% because realized we went from 84 to 408. 80% of that is right back in here. Guess what? I mean, look at the chart. Where's value, Bob? Where is it? All this stuff. There's no real value.
Let's not take that much of the chart on. It's push that out so that value range shifts back higher, because even this ridiculousness.
How about from the Obama too big to fail low? That's right here. That's 21. I mean, where do you want to go back to?
Keep going. Again, I mean, we haven't even sniffed these value ranges long term.
Right.
That's what I'm trying to get here.
Here's a 10-year chart. We've gone back 10. You start to enter value at 190. That's 130 from where we are. What's going to take this? What is going to take this back over 408 in the next 6 months? What is going to do? What out there is going to save us right now? Is ET coming and everybody gets $1 billion? I just ask.
ET? You mean ET phone home? ET?
Yes.
Or is there some other?
Is ET coming to provide world peace? Cancer's cured.
That's all the food you want is grown in your garden.
Yep. And nobody hates anymore and everything's perfect. That's what it's going to take.
All right.
And I don't see us being close to that today, but ET could show up any day. Anything's possible.
Again, we said it on the show.
That's the risk. That's the risk of being short here, is that ET shows up, because that's what it's going to take. ET is going to have to show up to phone home to save us. Somebody's going to have to go to Mars, and we already know that ain't happening.
Listen, I keep saying it. Nobody's going to Mars until
now. They may go through some portal.
Eastern Nevada. It's closer.
They may go through some portal, but that's going to, that's going to take some work. It's going to take some heavy lifting.
All right, man. Another great show. Join us at marketvitals.io. Please share, retweet, plagiarize the broadcast far and wide. Appreciate it. Awesome. Again, Matt. Thank you, Lee. And welcome, Nav. Thank you.